Well, thank you, ladies and gentlemen. We'll start the presentation officially now. We're very excited today to bring you Q2's fund update and market outlook. I'm joined by Ryan McMillan and Dean Cerrone. Today, we'll go through before we get started, just a general disclaimer. This is general advice. So if you are interested in investing in the fund, please speak with your financial advisor. Please be aware that it is for wholesale investors only. You must provide a wholesale certificate if you are interested in investing. And as we say, please seek advice. So today's webinar, we're joined by Dean Cerrone, CEO, Ryan McMillan, the Chief Investment Officer. Dean's going to provide you a bit of a review of the fund, some highlights, and really what's driving returns. That'll lead into Ryan's section where he'll talk about the forecast, where we see the market going, some topical events, and how they're likely to impact the fund over the coming months. It's been a pretty exciting period. So without further ado, I'll hand over to Dean so we can get right into it. Over to you, Dean.
Thanks, Gabe, and thank you to everyone for joining us today. For those who aren't already aware, I'll provide a bit of an overview of the fund, and then we'll get into the detail after that. So the MTC Digital Asset Fund is a liquid crypto fund. So what does that mean? We invest 100% into the liquid crypto space. So it's a very focused strategy. It's a long hold strategy where we're looking to be positioned in what we believe are the best liquid crypto assets that will form, the leaders in the ecosystem over a 5 to 10 year time horizon. And our job as active managers is to make sure that portfolio is positioned as we go in the assets that show the most promise and through the various periods of the risk cycle, the 4 year cycles that we see in digital assets and macro. We focus predominantly on the top 50 liquid assets by market cap. So we think the risk return profile of those assets is the right strategy for us, where they're very established in terms of market cap and liquidity, but also showing real strength around developer adoption, user adoption, and even revenue. So that's where we focus our energy. We really like the picks and shovels of the space. And the other aspect to the portfolio that's quite interesting and unique to digital assets is that via staking, we can generate around a yield of around 3 to 4% across our portfolio each year. And we do that while our assets are held in institutional grade custody, which is provided by Coinbase and has a layer of insurance by Lloyd's of London over the top. So the assets are custodied very safely and actively managed by our team. In terms of the portfolio weighting, this month-end asset allocation is at the end of June, so end of financial year. Store of value is a big component of the portfolio at 52%, and that's really our BTC Bitcoin allocation. And then the next largest component is layer one, which is the blockchain infrastructure component, and then some smaller allocations to other interesting segments that we like, but with a really strong focus around picks and shovels. So that's where we focus our energy, in the larger caps and the picks and shovels. All right, so I'll now move into a little bit more about the portfolio over the financial year that we've just ended. So we'll start off with fund performance. So for FY 24-25, the fund returned 17.5% for the year, which is a good result, but it really was a period where there was two strong stories, two strong narratives that shone through. And what those were Bitcoin just showed an immense amount of strength for that year, and also the year prior to it as well. Whereas the alternative coins, the other coins outside of Bitcoin, were a drag on the portfolio. And as you can see in our return attribution chart for this period, Bitcoin contributed over around 30% in terms of positive gains, and the other components held us back with a net result of 17.5% for the period. It really has been, we're about to talk about the market we're heading into now, which is dramatically different, we believe, than the one we've just experienced. And month to date, the portfolio is up around 20% against Bitcoin just 10%. So we're seeing things changing at the moment, and we'll go into that in more detail. But we're heading into what we believe is a very exciting period for the asset class. And then finally, just on the bottom left there, we've just got a chart where we're comparing ourselves, zoom out back to 2023 against Ethereum and the Eureka Crypto Hedge Fund Index. and you can see there that the fund has performed very strongly against those indicators. So what I want to look at here is just looking at market flow dynamics, and this is such an important aspect of investing in the crypto space. And this chart on the left that you can see with that red line going up there, this is showing Bitcoin dominance. And Bitcoin dominance is a very significant and important metric that we follow closely in the crypto space. And what it is, it's the percentage of Bitcoin relative to the rest of the crypto space in terms of market cap. And we can see, in 2022, Bitcoin dominance was at 40%. And between late 2022 and just as recent as a couple of weeks ago, it's just been a strong upward trajectory right up to to 66%. So that's Bitcoin's market cap being 66%, the rest of the ecosystem being 34%. But what's interesting is, as you can see, that red candle on the top right, we've just seen a real breakdown of what's been happening there, and we've broken that support line, which is very interesting. And Bitcoin dominance has gone from 66 down to 61. And if we do continue to follow the pattern of the previous 4-year cycles, we can see this breakdown potentially down to something like 40%. And what's happening there? This is not an indicator that Bitcoin is going down in terms of its growth. It's just an indicator that the rest of the ecosystem is going up by more than Bitcoin itself. And so if you look at what's happened in July, relative to the chart on the right-hand side, we've seen Bitcoin this month achieve around 10% for the month, Ethereum plus 50%, which is huge, and Solana plus 30% for the month of July. So we're seeing the patterns and the trends really shift in favor of alts. And this table on the right-hand side, which is this capital flow, and we have seen this happen in multiple phases over the previous couple of cycles. Capital starts in Bitcoin, and we see this really strong growth in Bitcoin dominance, which we've just talked about, and then the capital starts to move down the stack or goes into more risk. We see it start to flow into Ethereum, which is the second largest token in the ecosystem by market cap, by a significant amount, and then flow down into large caps, which is projects like Solana and Ripple, and then further down again into the mid-size and even micro caps, and then we start to see those really explosive moves by those other projects, but beneath Bitcoin. And our portfolio, just to make it clear, is allocated. I've overlaid our allocation at the moment as it stands, essentially today. We're about 46% Bitcoin. It is a core cornerstone of our portfolio and will remain that way. However, our allocation to phase 3 large caps and phase 4 the alternatives is growing, and we believe we're positioned to capture these explosive moves that we think are coming up over the next 6 to 12 months. And ultimately, what we're looking to do is capture those gains and roll them back into Bitcoin, and achieve greater growth for our overall investor base as we go through these phases in the cycle. I'll leave it there for now, and we'll talk about what we think is coming shortly. You're on mute, Gabe.
Apologies, guys. Thanks very much, Dean. I think the highlights there are Bitcoin dominance up to date, or rather to the end of last month. That has been the factor. If you had a look at the chart there, you would see the view is 150,000 price for Bitcoin at the end of the year. However, a decreasing Bitcoin dominance. Why? Because the altcoins will outperform Bitcoin in the coming 6-month period. Now, if you've got any questions for Dean, up on the top of your screen, you can see a Q&A button. So take control, pop out, chat. To the right of that is Q&A. Please post those questions in the Q&A section now, and we'll answer those at the end of the presentation. And indeed, as Ryan goes through his section, if you do have any questions pop to mind, feel free to open the Q&A section, and we'll address those at the end of the presentation. Over to you, Ryan.
Thanks, Gabe. If you move on to the next slide, you can just see a few headlines here. So these things that we're looking at, maybe not everybody, this might not have come across everybody's desk, but what's been a really big activity in the last few months has been regulation in the US. So the Genius and Clarity Acts are the two things we're really excited about in the US. The Genius Act is guiding enhanced national innovation using stablecoin. So effectively a stablecoin act. It regulates stablecoin issuers to back their stablecoins one-to-one with cash or short-term treasuries, and regular audits and disclosure standards. It creates a federal licensing pathway for stablecoin issuers, bans algorithmic stablecoins. If you remember a few years ago, Terra Luna, that sort of activity is banned and will not be regulated, approved under this regulation. Ultimately provides legitimacy and clear compliance pathways for stablecoins, unlocking broader corporate adoption for stablecoins, which is really nice for the US to have this new first crypto-specific bill passed, and to give that level of clarity for participants in crypto. The next act up is called Clarity Act. So this is crypto-linked asset reporting and transparency for institutional trust and yield. Ultimately, this is a market structure bill. It will help define what are utility tokens, what are digital commodities, what are security tokens, clarify when a token might transition from security to commodity. It will enable 401k and pensions to invest in crypto, and fiduciaries as well with more confidence. So this is much broader than just stablecoins. This is the whole crypto ecosystem getting a level playing field of understanding that can give more institutional investors the comfort to come and invest and understand what they're buying. And you can see already one of the headlines here on the right: Genius Act makes immediate impact as JP Morgan looks to allow crypto as collateral for lending. The big banks have been waiting for this clarity to be able to enter into the sector. They were effectively locked out of it by the Biden administration, and now they've got a chance to come and participate here. I think a lot of people would be aware Tether was one of the most profitable companies in the world, 40 employees, and it made more money than Goldman Sachs. The banks have been locked out of that and really want to get a piece of it. So expect them to move in pretty quickly and then start offering stablecoin payment rails and really helping that ecosystem. What else has been happening over the last 6 months, particularly, is this corporate treasuries are accelerating. You see the chart here on the bottom left. Funds and public companies are now 11% of all Bitcoin holdings. You can see the real acceleration in the red. That was when the ETFs launched, and then you can see another acceleration which aligns with late last year at the point that global accounting standards were changed to allow corporates to more easily or more effectively put Bitcoin on their balance sheet. Prior to that was mostly only MicroStrategy putting Bitcoin on their balance sheet. 200 companies now, public companies, are buying Bitcoin, and that grew 58% last quarter alone. So we're seeing really parabolic interest in treasury companies, in public companies adding treasuries like Bitcoin, and even now Solana and Ethereum to their balance sheet. And you can see how fast this has moved. We expect this to continue for the next 12 months at least, as companies have been locked out of the system and now can participate. So that's a really interesting trend. We expect it to continue and give really good support to the market. Some more news: Donald Trump set to open US retirement market to crypto. So this is a 401k. This is a $10 trillion pension fund effectively in the US, has been locked out of crypto and other investments. So now they will be allowed to participate. We think a 1 to 2% allocation could be expected from there, which is 100 to 200 billion in new flows into crypto. Further to that, Schwab have also announced a similar amount. So they're a $10 trillion platform. They are going to allow Bitcoin and Ethereum trading on their platform as well. So this is another huge unlock. Similar amounts can be expected to come in just by these two activities alone. Tokenization took a really, really interesting trend as well. Pick up just a couple of weeks ago, something called X stocks launched on Solana. So this means you can trade 24/7 derivatives of stocks. So these are tokenized stocks, effectively backed one-to-one, like a stable coin is backed one-to-one. These are stocks backed one-to-one and tradable on centralized exchanges and decentralized exchanges. Over the last 2 weeks, we've seen about $80 million in transaction volume there. focused on the top 60 stocks only at the moment, but a really interesting beta sort of project going on there. And we think that that's a really interesting trend, which will pick up. From more of a macro perspective, there's been a real change in commentary from Trump and from Bessent. They earlier in the year they were talking about balancing the books. That is, we had Doge going on, looking to cut costs, and tariffs to increase costs to really reduce the deficit and strengthen the US economy financially. They've really walked away from those comments and are now only talking about growing their way out of the debt. So I think the realization has become pretty clear that they weren't able to do the cuts to spending that they wanted, and now they have to grow their way up. What does that mean? That means an increase in money supply, and we'll get to that on the next chart, what that means for Bitcoin, but that's really positive for Bitcoin. Bitcoin is better correlated to that monetary trend than anything else. So we think it's a key investment that you need to hold in this environment. And then lastly, crypto ETFs are coming. So we're going to see wider, a broader based rally from crypto. We think that will sort of align with a new alt season where we'll see Solana, maybe Sui, some others, XRP even, will be able to get ETFs off the ground and really open the doors to a whole new source of capital. Institutional capital can come in a lot easier, and so can a lot of retail investors not having to go through an exchange. So we have had a Solana ETF launch just a couple of weeks ago that's attracted $100 million in flows in those 2 weeks. So that's pretty positive. It's not a perfect spot ETF, and we do expect those to be approved in the next couple of weeks. And we think Solana will be first approved and first launched. So we're really bullish on that token especially. In terms of risk factors, if we just go back briefly, I can talk about those very quickly. I think that there is concern that rate cuts will be typically good for us, but if they come on the back of a large amount of job losses, that will be sort of a recession indicator, and there might be a pullback in markets on that. Not our base case, certainly. We think rate cuts will come through slowly, and jobs are holding up quite well at the moment. Trade tensions are certainly evaporating. I think overnight we saw a bunch of deals signed through Asia and good talks on Europe again. So that looks to be in the rearview mirror somewhat now, and equally global conflict as well seems to have died down. So we think that the outlook is really, really positive. So we talked about monetary expansion. This is the global M2 leading Bitcoin by 12 weeks. It is been straight up for nearly 12 months now, and Bitcoin has been following that. If this trend correlation continues, we think you can expect to see Bitcoin around 150K by September. And if we get those rate cuts that we think are coming in the US, we expect global M2 to go higher again and take another leg up, pushing the market higher for year end. Dean talked about this as well. This is a really, really strong signal for our alt season. We get these once every 4 years, typically for an extended period. ETH breaking trend with Bitcoin here. You can see a breakout on the chart. This has been a downtrend for 2.5 years. Seems to have bottomed out a couple of months ago. And then on the US bombing Iran, I think that gave the market some certainty that that conflict is certainly not going to escalate. The US showed its primacy in terms of geopolitical power and finished that conflict very quickly. So the market took comfort from that, and we've seen risk be added, and that includes ETH now outperforming Bitcoin. Bitcoin's still performing well, but ETH doing better. We've even seen a couple of days, and I think the last week even, Ethereum ETF flows outpacing Bitcoin. So we think this is the start of a new trend where altcoins can continue to outperform Bitcoin and add some real value to investors. So what do alt seasons look like historically? They happen pretty quickly over 12 to 15 month period, and that the other 3-year period of that 4-year cycle, they don't do a terrible lot. Where we sit now, we think it's pretty, the signals are really good that we're entering or at the very start of another altcoin cycle, where from here, we think in the next 12 months, we could see 2 to 3x in that market cap heading up from 1.5 trillion to 3 to 3.5 trillion. So really big gains there over the next 6 to 12 months to be had if it plays out like previous cycles. You're on mute again, Gabe.
Good at that. They say history doesn't repeat itself, but it certainly rhymes. And people tend to make history. So the same sorts of behaviour is likely to occur over the next 12 to 18 months. As Ryan said, regulatory environment, very conducive to strong flows into the crypto market. So the US is wanting to be a strong player in the crypto space and is pushing regulations through to unpin the shackles and really drive flows into the crypto space. Bitcoin following the M2 trajectory. So as money supply increases, risk on, Bitcoin up, we're looking at 150 by the end of the year. More excitingly though, the altcoin season seems to be underway. And when you see altcoin season come in, that's when you see some astronomical returns. If you'd like to participate, as always, we would welcome your call or welcome your application. To put an application in, please click on that link at Merkle, www.merkle.com.au. You'll see a little button there to press apply now. In terms of the fund, safe, secure. It is crypto, safe because it is backed by Lloyd's of London. We do have insurance. It is institutional grade custody. Management fees are 2.20 fund. That management fee is defrayed, so it is cheaper than an ETF because of the staking. So we get 3 to 4% yield on the fund covering that management fee. Performance, if we outperform a hurdle with a high watermark of 10%. So we're chasing better than 10% returns, and everything's pointing to the direction that will outstrip that with a 20% return to date this month, outstripping Bitcoin at about 10%. Minimum investment of 50,000. Very importantly, it is only open to wholesale investors. So please get your wholesale certificate. Without further ado, I'd like to hand over to Dean and Ryan for some Q&A. In fact, I might take the first question from Andy. If I invest today, when am I in the market? I put a post up there. The fund is priced and accessible on a monthly basis. So what that means is if you were to invest today, would accept the application, pricing would be made on the 30th of July, you would be in the market on the 1st of August. If you submitted your application on the 2nd of August, we will take the application, the unit price would increase or would be struck again on the 30th of September, and then on the 1st of October, your investment would be in the market. Tim, over to you, Ryan. Please ask Ryan if there are any thematics or specific tokens that you are focusing on in view of the altcoin season.
Yeah, it's a good question. You can see we are starting to allocate and move the portfolio away from Bitcoin a little bit into alts. At the moment, well, we're still early in the alt season or still waiting for full confirmation, some more secondary, tertiary confirmation that the alt season is on. We want to stay in protocols that are making profit, and that's typically DeFi. So our next biggest holding outside infrastructure, being actual blockchains like Solana, would be DeFi, and also a little bit of decentralized physical infrastructure networks, DePIN as well. So these are profitable, money-making, revenue-generating protocols. We're focusing on those at the moment. And there's also a little bit of meme coin as well. So those DeFi protocols can benefit from meme coin activity on them, and have been really profitable for the last few months. So we expect that to continue. As the alt season continues, we'll start to add more things, potentially some AI plays and things like that. These haven't really got the love from investors just yet, but we think they will run pretty hard when they get their chance.
Thanks very much, Ryan. A question from David. Will Bitcoin retrace through September, or are inflows too big? Probably one again for our Chief Investment Officer, Ryan.
Yeah, it's always hard to tell what's going to happen in the future, but I do think we are consolidating here around this 120 range pretty nicely, and expect the next move to be up. What we have seen for the last 18 months or so is this sort of consolidation, maybe some candles or some wicks down. We could head back down to 110 or something very quickly, but the next big move we do see is up above to up to 130, the next level up, wherever that might be. So if you keep that longer term horizon, I think it's very positive. In the short term, wicks down are certainly possible as well.
Thanks very much, Ryan. Just a reminder, top of your screen, look for the Q&A button if you do have a question now. I will close the session off in a short amount of time if there are no more questions. Just a reminder, we have an absolute open door policy. So if you're thinking anything crypto, if you'd like to know about the digital asset space, any questions at all, please contact Dean, Ryan, or myself. We're very happy to be spokesmen for the industry. We're a big believer in the space, and we're happy to help out anyone either with the fund or asking or answering any questions in general nature that you may have. Any final questions? No? Well, with that in view, guys, have a fantastic month. We're available, but we'll be back online again for Q3 and an update, hopefully positive with altcoin season underway. Take care. Have a great day. Thanks again for your time.
Thanks all.
Thanks, everyone.